Hello, everyone, and welcome to Momentum Channel. Today, we're going to be walking you through our stock market investment portfolio, currently sitting at $475,000. This is a passive income portfolio, bringing us both dividend income and also geared towards growth. We're going to be walking you through all of our holdings from the largest to the lowest, and at the end, walking you through all of our latest stock buys and sells in this portfolio. Let's get into it. Our largest holding in this portfolio is the FTSE Canadian High Dividend Yield Index ETF, the ticker symbol VDY. We currently have a total of 3,706 shares of VDY with an average price of $41.57. Given the last trading price for VDY, our holdings is currently down by 0.9%, just shy of 1%, or unrealized return of negative $1,422. VDY is our largest holding in this portfolio, currently sitting at 32% exposure. A little bit about VDY. It's a Canadian dividend-paying ETF, high-quality one that gives you exposure to 56 high-quality dividend-paying Canadian stocks. It has a management expense ratio of 0.22%, and it does pay a dividend on a monthly basis. Its annual yield is currently sitting at 4.5%. Looking at the past performance of VDY at the chart at the bottom right, you do see that over the past 5 years, VDY has returned a positive return of 24%. Moving on, we're going to take a look at our second large holding in this portfolio, which is Vanguard S&P 500 Index ETF, the ticker symbol VFV. As the name suggests, here our exposure is entirely to the US S&P 500 largest companies. It has a dividend yield of 1.3%. With VFV, you're more focused on growth and not too much on dividend. Hence, you do notice that the dividend yield is kind of lower, and it does pay its dividend on a quarterly basis. With VFV, it is currently performing quite well. In fact, over the past week, it has been quite going up in terms of the price per share, currently sitting at $102.20 per price of VFV share. We currently have 1,323 shares of VFV with an average price of $93.13. That shows a positive unrealized return of 9.6%. or up $11,848. VFE currently stands for 28% of our holdings. With VFE, the management expense ratio is a lot lower, only at 0.09%. Our third large holding is Vanguard All Equity ETF portfolio with ticker symbol VEQT. VEquity is our holding that we have as part of our Smith maneuver. And if you're not as familiar with the Smith maneuver, we have a playlist dedicated to this. I'll make sure to add it to this video for you if you're interested to check it out. We currently have 2,987 shares of VEquity with an average price of $33.98. Given the last trading price of it, which was at $34.61, our shares are up by 1.9% or an unrealized gain of $1,882. VEquity stands for 22% of our holdings. With VEquity, you are focused as well more so on diversified investing. With VEquity, you get exposure to US stocks, Canadian stocks, international stocks, and emerging markets. In other words, it's considered to be an all-in-one holdings. You don't need to buy actually multiple different ETFs. If you only hold VEquity, you're already getting that international diversification and throughout diversification that you might want for your portfolio. It does pay its dividend, however, on an annual basis, only once a year. Currently, it's slated to be paying its next dividend on January 29th of 2024. With VEquity, you're getting exposure to over 13,000 companies globally. Next, we have shares of XEF or iShares Core MSCI East and Far East IMI Index ETF. This is one ETF that gives us exposure to international markets. We currently have 815 shares of XEF with an average price of $32.62. Given the last trading price of $33.79 for XEF, our shares are up by 3.6% or showing a positive unrealized return of $954. XEF currently accounts for 6% of our portfolio. With XEF, you're collecting your dividends on a biannual basis. It does have a dividend yield of 2.1% annually. With a management expense ratio of 0.22%, XEF gives you exposure to over 2,600 different companies internationally. Next, we have 4% exposure to XUU, or iShares Core S&P US Total Market Index ETF. With XUU, we are getting exposure to 115 different holdings. And through XUU, you're virtually getting exposure to the entire US stock market. Now, you might be wondering why is only 115 holdings as part of XUU if you're getting exposure virtually to the entire US stock market. That doesn't quite add up. The main reason behind it is that XUU consists of multiple other ETFs as part of its holding. And when you add them all up, you're getting exposure to over 10,000 different companies throughout the holdings, and that's how you get exposure to the entire US stock market virtually. With our shares being bought at an average price of $41.10, we currently having 473 shares. Our shares are showing to be up by 3.8%, or an unrealized positive gain of $743. Shares of XUU were last traded at the price of $42.67, and if you look at the past 5 years return, those shares overall for XUU at its market price are up by over 52%. XUU has a decent management expense ratio of only 0.08%. It does pay its dividend quarterly, and then its next dividend payment is slated for June 30th. Next, we have shares of VTI, which accounts for 2% of our holdings. VTI actually is traded in US dollars, and that's why we hold our entire shares in our RRSP accounts to avoid any withholding taxes. We currently have 36 shares of VTI. The average price for our purchases are at $204.92. And given the last trading price of $212.71, our shares are up by 3.8%. VTI does pay its dividend with an annual yield of 1.6%. Its dividends are paid on a quarterly basis. As part of VTI, you're getting exposure to the entire US stock market virtually, with a number of stocks as part of VTI being at close to 3,900. Our next big holding is VT, another holding that we have in our RSP account, given that it's traded and available in US dollars. With a management expense ratio of 0.07%, VT does show a dividend yield of 2% annually. VT does pay its dividends quarterly, and its next dividend payment is slated for June 22nd. Through VT, you're getting exposure to over 9,500 different companies worldwide. Through VT, you're getting, again, more of an all-in-one basket ETF, giving you exposure to the North America, international, and emerging markets. Given our purchase price of $92.91 per share for shares of VT, our 75 shares, we are up by 2.1%. We're looking at iShares Core MSCI Emerging Markets Index ETF with ticker symbol XEC. We currently have 350 shares of it, showing a total book value of $8,799 with an average price of $25.14. XEC does pay a dividend on a biannual basis. Its yield is 2.6% annually. With a management expense ratio of 0.27%, XEC has shown to be down by close to 11% over the past 5 years. However, our shares are currently up by 0.5%. Through XEC, you're getting exposure to over 3,000 stocks and companies in the emerging markets. Next big holding is iShares Core S&P Toronto Stock Exchange Capped Composite Index ETF, ticker symbol XIC. With XIC, we get exposure to virtually the entire Canadian stock market. We have 225 shares of it at the average price of $32.26. Given the last trading price of $31.98, our shares of XIC are down by 0.9%, just less than 1% negative, or showing an unrealized return of negative $63. With XIC, you're collecting dividend income on a quarterly basis. It does have a dividend yield of 3.3% annually. Next, we're going to be taking a look at our asset allocation as a result of this portfolio that we have currently sitting at over $475,000. We have our largest exposure to US market at 45%, though we have a target of bringing it up to 50% exposure to US companies. Our next big holding is exposure to Canadian markets at 40%. Our plan is to bring it lower to only about 15% exposure to Canadian markets. Next, we have 11% to international markets. The goal is to bring it up to 25%. And lastly, we get exposure to emerging markets only at 4%. Our goal is to bring it up to 10% based on our target asset allocation. And lastly, if you look at our latest stock buys and stock sells, last week we sold our entire shares of Tesla that we have. In other words, now we are made our portfolio truly and fully passive at this time. We sold our shares of Tesla at a profit, not necessarily the greatest amount of profit, but at the end of the day, we wanted to sell those at some gains and use and repurpose those funds to buy more shares of our high quality passive income ETFs that we currently have. The stock buys that we had last week include shares of XEC, XEF, VFV, XUU, and VDY. As for our dividend highlights, if you look at it, our portfolio currently earns us an average annual dividend amount of $11,544, which shows to be up by $212 compared to the last portfolio update that we provided. That's quite a nice increase in our expected annual dividend amount. That translates to an average of $962 in dividend income per month, or $30 dividend income per day. Not bad, eh? And if you look at our average portfolio yield on cost in this portfolio, you're looking at a 2.5% dividend yield. Lastly, if you look at the portfolio average management expense ratio, given different exposures that we have to different ETFs at different management expense ratios, our average is at 0.17%. I hope you found this video beneficial, everyone. Thank you so much for watching this video until the end. Let me know in the comment section down below if you are owning any of these specific holdings in your own portfolio, and what stocks or ETFs you are buying or adding to your portfolio, and which ones you are selling. Love to hear from you. And if you haven't done that already, I would love it if you can support our channel by subscribing to Momentum Finance on YouTube. Thank you so much, and I hope to see you all next time.